much. Joining us on the line to continue with our discussion on ABIL is Fund Manager and Chief Executive of Sim Global, Kokkie Kooyman. Kokkie, thanks. I'm sure that you've been working through your numbers given what happened on Friday evening with Moody's putting out its announcement, downgrading Capitec credit by 2 notches. It seems rather unusual.
Yeah, I think very unusual, and in my opinion, it's both unwarranted and in fact even dangerous.
Now, the Reserve Bank was very quick to react Saturday morning, which I guess for the Reserve Bank is quick, within 12 hours, a very strong statement. Would Moody's, would they take the Reserve Bank seriously? Would they take what Capitec said in defense seriously?
Look, a rating agency obviously has to be independent. So they will listen to all the parties and should, and I think do come to their own conclusion. If you read the Capitec statement they released, it does seem, and I think as well, that Moody's acted too hastily, and that they should have had further discussions and done more work. But obviously they'll say that they came to certain conclusions and felt the obligation to clients was to warn clients that the risk, in their opinion, had increased.
Well, some clients believe it, but and the share price is down by 5% this morning. With your stress testing, what are you finding? Are there similarities between Capitec and ABIL? Indeed, similarities sufficient to warrant this kind of a downgrading?
I think not. There's 3 differences. The one certainly is, firstly, Capitec's capital levels are considerably higher than African Bank's was. The reserving levels are also very good, and their reserving policy was considerably more conservative than that of African Bank. So, and obviously they didn't have a furniture chain like Ellerines that was bleeding. But what you can't see at this stage is obviously the effect of the deterioration in their client base. So the economy has slowed down a lot. Unemployment has gone up. So clients obviously have difficulty, especially in their market segment, to pay their loans, and that to a large extent affected African Bank because they were underprovided for the environment. It does seem, when you look at all the numbers and at the history, and I looked at the last 10 years, that it is true. Capitec has consistently been more aggressive in providing, has been more ahead of the curve. So based on the history, I think Capitec is well provided, and if the economy does deteriorate, should ride it quite well.
Kokkie, going back onto African Bank and these stress tests and analysis that you've conducted, is the sad story or the breaking point, the Achilles tendon maybe, of ABIL, the Ellerines acquisition?
It's actually fascinating that the 2008 acquisition and the rights issue they did destroyed a lot of value and put them on the back foot. And I think often investors and even management themselves don't realize how much time, management time, just gets taken up by something like that. Leon Kirkinis was obviously spending a lot of time trying to get Ellerines right, and in discussions there were taking time away from what was happening in his own book. But underlying, I think the structural problem that African Bank had was that the provision policy was not conservative enough for what happened. Now, in an economy that is still growing and the market is sound, the provisioning policy was fine, but it was found that suddenly when it deteriorated, and I suppose the strikes were the trigger, and you can say that was unforeseen, but then the provisions were not adequate. Now, obviously, what caused the death spiral in the share price, and it seems that Coronation was very large sellers of the shares, which obviously also affected confidence. So in the end, when they then came with the proposal for a 10 or 8.5 billion rights issue, and the CEO resigned, the market lost confidence. And I think that really, with a large shareholder not prepared to stand behind the bank, and the CEO resigning, and you needing a very large rights issue, that think the Reserve Bank did absolutely the right thing then to step in.
Kokkie, just very quickly, those shares that some people bought last week, there's quite a lot of discussion about them having value or not having any value. Now, clearly the shareholders have supposedly lost everything, so have the subordinated debt, and even the senior debt has got a 10% write-off. Are those shares going to be worth, people who bought just before ABIL went bust, will they get anything back for their stock?
Yeah, sort of, unfortunately, a lot of it is now hidden. We won't be able to see. But I do think that if you bought shares at 50 cents, then, you know, at the point of suspension and what's happened subsequently, you know, there will be value of more than 50 cents. But it depends on the deterioration further in the economy. It depends on the costs that are loaded by, you know, all the banks and so being involved, and especially Tom Winterboer, who, you know, and he brings in expertise. But I think the fact that Ellering's bleeding has been stopped, that will help. And then obviously what people must realize is they will only unlock that value if they subsequently follow a rights issue. I mean, African Bank does need capital, so it's going to come with a rights issue, and we don't even know what the mechanism will be. But the fair thing would be to give the shareholders who had shares the first option to follow their rights. So you're going to have to put in more capital to be able to unlock that value.
So start saving now. That was Kooyman, the funds manager and CEO of Sim Global.